Hello everyone, this is Dave, aka DREVG. Today is Monday the 28th of June, and I'm putting up a trade that I made this morning that's almost to our target, and I wanted to give you an idea of why I entered it and what it is. This is the euro dollar on an hourly chart, and I've indicated a few different things. This is the 14 SMA right here. This is the 200 EMA. If we go to a daily chart, you'll see these four red lines represent the daily support and resistance areas that I identified first. And going back to hourly, you'll see at the bottom this is RSI on a 4-period and a 20-period momentum with a 10-period SMA on the momentum. I use this to kind of give me an idea where momentum is heading. Lastly, these lines that you see here are just the daily pivots. Here's the pivot point here, S1, S2, which is where my target is, and then the high from Friday and the low from Friday are here. You'll see that this yellow line is here and it's pretty bold and bright, and the reason is that is the 200 EMA on the monthly chart. For me, this is a pretty big deal because even though these price action candles were lower than it is now, it hadn't touched the 200 EMA yet. If we can get past that, it's really going to speak volumes about where this thing is going to be going, and maybe even down to parity or so. So what I did here to get the entry was similar to the trade I posted last week, where I used RSI Divergence to enter the trade and then manage it through support and resistance areas. I'm going to zoom in here for a second and give you an idea of where I saw the divergence and what prompted me to make the trade. These candles here correspond with the RSI cross here, and you can measure those out and make sure they're the same length, and indeed you see that they both touch, and they are. I have positive bullish divergence here, and it's looking really strong, except it's also coming up on the 200 EMA, which, as most people know, for me that's a pretty big deal. But I have RSI trading below it's 50, and I even, when I was analyzing the trade, drew in a small trend line on RSI just to give me an idea, and it would have been right here, because this is the price action I was seeing, not the price action over here, obviously, when the trade has already been taken. So I felt strongly that if the price could get rejected off of this trend line on RSI, and I had momentum in my favor, that this particular divergence on RSI would eventually play out and give me a nice drop down to the next level of support, which in this case I identified as Friday's low, S2, and also the 200 EMA on the monthly chart. So this is a little bit different in that we usually try and wait for RSI to cross the middle Bollinger Band, but in this case we were already well below that and below the 50, so we didn't need that as confirmation. But since I didn't have that as confirmation, the only thing I really had to go on was a break of the 200 EMA, as well as momentum breaking its 100 mark. So I'm going to go down to a 15-minute chart, kind of show you a little more detail. If we move these to where they were on the hourly chart, you'll see that the divergence is still there, even though they get a little skewed from the different time frame. So when we put these in, you'll still see the divergence is here, and we can analyze a little bit of how to enter the trade by going on a lower time frame and then waiting for price action to come up, maybe touch this 14 SMA, which it did, and also that gives us an opportunity to see when it might cross over downward through the Bollinger Bands on RSI. I didn't really use it in that case. I really kind of stayed on the hourly charts. I wanted to just make sure that you could see that there was definitely something going on here that would allow us to get in from a lower time frame. I really thought that this daily support and resistance area was pretty strong, and I put my stop loss above. So if we were to measure this out, we're looking at 30 pips back and 75 pips down. So almost 1 to 3 risk to reward. I'm probably going to end up moving that down so that we protect some profit. I didn't take profit off the table with this run. I had some other things going on, and I wasn't able to monitor it as closely as I wanted to. But I'm very happy that we were able to break the 200 EMA on the hourly. We did retrace up. I'm going to get rid of this point here. This is simply the entry point. So this is a nice pin bar here that we had after it broke the 200 EMA. And then we even retraced some more back up to the daily pivot. And then we had this break down pretty strongly. And the reason I was very confident in making the trade where I was since we didn't have anything to go on from RSI breaking a Bollinger Band, I used momentum instead. And you see here the pink line down here on momentum is finally breaking the 100 and heading down. It also was bumping up against this 10 SMA, this dotted yellow line that I have here in Momentum, and that's a really good indication. When these things tend to line up, you usually have a pretty good run. So with that, I hope you get something out of it. It's still a great trade. I'm pretting's happy with how everything's going. I'm probably going to let most of this run. I may take some profit off the table now. I'm going to put a weekly up here, and you'll see that there's not a lot of recent price action. We have to go way back to 2005. So these levels are pretty significant. And even on a monthly basis, you'll see there's where we're touching that 200 EMA again. So these levels are going to be pretty key. And remember, parity is somewhere right around here. I'm going to be watching that and probably playing this drop as it continues. That's pretty much it for now. If you do have some questions, you can feel free to email me at drebg@yahoo.com, or you can see me at informedtrades.com. I'm a senior member over there and have a blog, and I'd be happy to hear from you. Thanks, and good trading.